Well, welcome to our Forte Financial Podcast. It's a week before Christmas, and a lot of exciting things going on in our business, huh, Chris?
Definitely is time of year. A lot of things changing. Seeing some drastic changes in interest rates, which is, I think, everybody's biggest question, or it's on everybody's mind right now. And I'm sure you're getting the same questions I'm getting on a daily basis from realtors and people that are interested in buying.
It's really exciting. It's really exciting. We've opened up the books on refinances now, where most people, lenders, borrowers, customers, they're not even thinking about it because a month ago, people were closing mortgages on rates in the 7s and 8s, and now rates have come down so much. We're literally offering people in the 6s and in the 5s on 30-year fixed rates. Some programs, which we'll get into more of that throughout the podcast. But it's an exciting time. There's a lot to share, a lot that people need to be aware of and be educated on. That's why we're here, right?
Yeah, I think I quoted somebody 6 1/4 last night on a conventional. They couldn't even believe it. What? No, not possible.
Yeah.
No, the changes have been drastic in the last 3 weeks, and some of those conversations about doing refinances already are just people are just in disbelief.
Yeah. I mean, as far as what changes and what causes those changes, let's address that because a lot of people don't understand, being that they know the Fed maintained rates at their 5 1/4-ish range of the Fed funds rate, and that hasn't come down yet. Mortgage rates have actually dropped over 1% in the last month. Really, probably our rates have dropped 1.5%.
National average is definitely a full percent lower than it was at least, 3 weeks ago?
Yeah, but it's the 10-year Treasury that has been coming down. It was over 5, and now today it was like 3.86.
Which still doesn't seem like a drastic change, but
that's a 20+% change.
But that
drop.
1 point has changed rates that
much. Oh, yeah.
I mean, all the what would you say, gurus that we follow and watch for, financial information throughout the year, and even, I'll give you the credit. You were predicting low 6s by January, but obviously, you're more, you've been in the industry longer, so I obviously look to you for that. But I mean, we're going to, we're in the 6s already, maybe even in high 5s, depending on the scenario.
Yeah, well, we are. We absolutely are. And, that brings up another topic here, FHA loans. This is crazy what we're doing with FHA. Anyone listening to this, if you have an FHA loan, you should reach out, honestly. We have a streamlined special. It's an FHA streamlined special right now where we can refinance your loan with no appraisal, no pay stubs, there's no income qualification, nothing. And we can do this with a credit score as low as 580.
But that's streamlined.
Streamlined.
Which means they have to have had the loan for, 6 months, and then it technically takes us about three weeks to get it closed, or
correct.
You're thinking...
So to qualify for a streamline, you have to have made 6 payments. So really it's about 7 months.
So before the 7 months is due,
it's usually 210 days from closing to closing that you have to wait, at least. However, and we have rates in the 5s on our streamlines right now.
The last one we quoted was 599, right?
Well, we have one at 599. There was another scenario that I was talking to and pricing out today, actually at 5.5. 5.5.
So higher credit score, probably.
Well, there's a lot of factors, we don't want to get into that because I don't want to turn this into an advertisement because we're not quoting rates. We're just educating on what's going on. That's it. Okay. So the point is, most people who got FHA loans this year,
they were in the 7s.
6s, 7s, and even as high as in the 8s. We're talking about rates in the 5s. So pretty much everyone who got an FHA loan this year, I would say 90% makes sense to refinance.
Yeah, whether it's a streamline or just a regular rate term refi.
Yeah, and so that's the point. So, but if a lot of people are like, oh man, well, I just got my FHA loan in November and I got 7%, and so that means I have to wait 5 months for a streamline. Yeah, that's right. However, we could still give you that low rate by refinancing you into another FHA loan, but a traditional way. So it's just a rate and term FHA refinance.
Right,
where
so they may not necessarily change.
It's just more paperwork. It's more paperwork.
So they might bring a payment to the closing or continue their payments. They're not going to miss a payment, but they're going to get a full percent, if not
There's a lot of
more
ways
lower
to
rate.
structure. Oh yeah.
So that in itself is huge.
Yeah. So FHA rates, definitely reach out. So one thing that we like to do to keep it simple for our customers is, people want to know what they're getting into before they provide, all this paperwork. They fill out an application. You pull their credit. We don't want to get into that either if it doesn't make sense. Like it's a lose-lose for both parties. So what we try to do is we say, hey, give us a copy of either your current mortgage statement, or if you just closed, the closing statement. Just give us a closing
we can go
statement.
right off the CD, right?
We will literally come up with a scenario for you, send you an email, say, hey, this is what we can do as of today, right now, based on these assumptions. And we're going to give you an assumption of your credit score is X, estimated value is X, and your debt to income ratio is X. Although on a streamline, there is no debt to income ratio. And some of those things don't even matter. But I'm saying in general. So then if it makes sense and then you think you want to do it, then we pull your credit, then we have you fill out the complete application, and then we verify all of your information. So then you're not actually doing any work until you know what the deal is going to look like, subject to some criteria. That's about it. Chris, tell us about, I think the viewers want to hear about the special, the $5,000 special. Why don't you talk a little bit about that?
So Fannie Mae recently came out with the SPCP program, the Special Purpose Credit Program.
Yep.
So if you live, I think there's, if I'm not mistaken, 21 different metropolitan areas across the country that qualify, but specifically to us is going to be places like New York metropolitan area and some northern New Jersey. There's some spots also through southern New Jersey, but so basically it's a program where if you live in that metropolitan area, you may qualify for a $5,000 grant. It's not a soft second loan. It's not a second mortgage or an additional financing. It is a grant. It's free money. If you live in this metropolitan area, Fannie Mae is giving you the $5,000 grant.
So give us an example of somebody that would fit into this, and then a scenario of buying like, New York City to Connecticut, which we get a lot of buyers from, the 5 boroughs moving up to Fairfield County.
I have somebody right now.
Give us an example.
She's living in the Bronx in like a third, I think it's a third story walk up, and she's moving up here, which, by the way, that doesn't necessarily matter. It doesn't matter where you're moving to. You can stay in the same area and buy in your same neighborhood, but if you currently reside there and it's on your driver's license and you can verify that, you could be eligible for that $5,000 grant, which goes towards your closing costs and prepaids. It's literally a free $5,000 grant. And then as well, if you qualify, you get up to a $500 appraisal credit towards the cost of the appraisal, which on average an appraisal is maybe $600. So you're saving the majority of the cost there. And then if you were, let's say, buying a 1-year home warranty on the home that you're buying because you're a new homeowner, you've never owned a home before, you want to have some sort of kind of like something to fall back on, they'll give you an additional $500 towards that home warranty too, which is probably about 50% of the cost of one of those. So the biggest thing is, we have to verify it through an eligibility tool. But if you live in a major metropolitan area like New York City or some of the areas in New Jersey, it's free money from Fannie Mae. And it could be up to a total of $6,000 by the time you're done between the $5,000 grant towards closing costs and prepaids, the $500 appraisal credit, and the $500 towards the 1-year home warranty. Just
awesome.
Free money
Awesome.
for people that want to be new homeowners, low rates on top of it, some extra cash. It's a win-win.
It's beautiful. Beautiful. All right, so I guess they got to call us and see if they qualify.
That's it.
Give us
That's
a call.
It's a 2-second process, driver's license or just address, and we can run that and see what works.
And realtors, definitely reach out if you want us to help, explain some of the stuff, educate you guys as well, because I know there's a lot of information we have to share. There's obviously one conversation that can be a half an hour with one realtor. That's great and that's educational, but that's why we're doing this podcast, so we can educate everybody and a larger audience and more people, consumers, potential homeowners, that don't realize they could refinance a month after they closed, realtors that don't know about programs because, maybe their current referral partners aren't doing some of these things, or if they are, they're not educating them on this. So that's our goal. That's our goal here, is to get our message out to everybody and help people be aware of what's going on, because there's so much misinformation out there. And
there is. I mean, as a former realtor, I can say that not spending the time to learn these programs, so that when you meet new people that maybe have a unique scenario, and just having the knowledge about these different programs and tools to be able to help them or direct them to a lender or a
Right.
broker that can help them
Yeah.
because they're so diverse. That in itself is empowering. So
Yeah.
I've been having a lot of conversations recently with that, just on the phone or in person getting coffee, just having these conversations about the different ways that a realtor can sit down and if they have a question, at least they have some knowledge to start the conversation and they don't feel like they have to just send them off. So that's been a lot of my time lately.
Yeah. No, you're amazing at that. You're amazing. I commend you because most loan officers, I've been doing this a long time, and myself included, most loan officers don't spend that kind of time, trying to reach out and continuing to educate their realtor partners, and you do that on another level, and I know they appreciate it because the feedback you've gotten is pretty incredible.
I mean, that's honestly, personally, I have the most fun doing that.
Yeah.
I enjoy the relationship part of it. Breaking bread, having coffee,
Yeah.
going out for drinks, whatever
Yeah.
it is, like that. That's to me, that is I don't know. That's just the best part of the business for me. Like,
Yeah.
it's great. It's a job. We make money. We all have a career, but the relationships and the friendships that come from it. Just yesterday I had somebody say something to the effect of, well, you're doing us the biggest favor anybody could ever do. You're helping us buy a house. And I said, I'm just doing my job. And in a way, it's kind of how it
Right.
came out. But they're like, no, you don't understand. And it was just like oh wow. Well, I didn't really mean to downplay it, but at the same time, I guess we don't realize how important it is sometimes. But I just tried to say, listen, I'm enjoying getting to know you guys, and really did this particular set of borrowers really enjoyed the conversations with them, and it was just great, and that was just kind of touched the heart a little bit.
It does make you feel good when you get those extra
Absolutely,
pats in the
especially
back.
the first time home buyer that's kind of struggling to get into a home, and you finally help them get there, whatever those steps were. But that's the fun part for me.
So speaking of homeowners getting into a house, something for maybe the people, the younger generation out there renting. Let's talk a little bit to that audience about. I hear a lot of a lot of young people are continuing to rent. They're on the sidelines. They feel like, oh well, rates are too high. Housing is too expensive. And that may not really be the smartest approach. And I'm not saying that that for everyone's scenario, I'm not saying everyone should buy. I mean, everyone's different.
Not everybody's different, but I see where you're going with that.
The point is, what I'm saying is you need to educate yourself, and we can help you. Just be prepared and be equipped by knowing exactly what it's going to look like. So if you have, if you're renting and you think, oh, it's going to cost me more to buy, you might be surprised. You might be surprised at what you're, First of all, we have programs like our FHA special where we can do 0%. You can literally put nothing down with our FHA loan, for first-time buyers. So you can literally get into a house under this program with less money out of your pocket than it would cost you to rent something with first month, last month, and a security deposit. Literally, you can do it with less. And one thing that I'm not sure if everyone realizes that's renting, but your payment. Now, again, we're not tax advisors. But talk to your CPA. Your mortgage payment, a portion of that, the interest portion, portion of the taxes, and PMI under some circumstances are tax deductible, where you're not getting any tax advantage by renting. So it could be a difference of, okay, hey, a $2,500 mortgage payment with taxes and insurance could really have the same net effect as, say, a $2,000 rent payment. Or I'm just giving a kind of an example where that's really apples to apples because your taxable income is that much less because of those write-offs that you have that you don't with renting. Plus, you're building some equity.
Yeah, I mean, like our 1% down program. You're buying maybe a $200,000 condo or townhouse, your first place. Maybe somebody just getting started, right?
Yeah.
You can put let's call it $2,000 down, which is your 1%, and we fund you the other 2% up to $4,000.
Yep.
So your rent, which would normally be, let's call it $2,000 a month, and you need first, last month security, there's $6,000. So you've already saved $4,000. Now, okay, yeah, there's some closing costs involved, but you're becoming a homeowner, and you're only putting 1% down instead of renting.
Yeah.
And then we have the taxable benefits and other things that you talked about that are possible for homeowners.
Yeah.
I think there's a lot of benefit there, and these programs exist, and they're not state funded where there's a ton of requirements. These are programs as lenders that we have access to give our clients.
And the point is like just be equipped. Just be equipped. You can apply. We will do a soft pull on your credit. So it's not a hard inquiry. Everyone's worried, oh, I'm going to get hit on my credit and the scores go down, which is a whole nother conversation that I guess we could get into it. But there's a couple of things I want to talk about just from some of the other videos we've done. That there's a lot of questions that came up. But as far as that goes, you're not going to have a credit inquiry because we do a soft pull. We'll do a full pre-approval for you. There's no cost. It's free.
Yeah, we're not doing an application fee. We're not charging.
We're not going to call you and chase you. If we're here so that, hey, maybe a year, 2, 3, 4 years from now is when you want to do something. We're here. We're here for you guys.
I think I just finished up a loan with somebody that I started 18 months ago.
Yeah,
they kind of got to a point where they rebuilt their credit. They had some things to pay off. And then they got to that point. We did soft pull multiple times throughout the 18 months to kind of check in and see where things were. This way we're not, doing rapid rescores and all the other stuff. We were kind of keeping it simple and light. And they got to a point where they had just enough money, to make it work. And their credit scores had come up, I think, 60 points over the 18 months. And they were sitting in a much better position, even with rates where they are.
Yeah,
they're much better off than where they were when they started 18 months ago.
It's amazing, and that's amazing. A good point about someone that, we're going to probably 6 months or a year from now. Even if you're that far out, you should start that initial process now because, you never know what's on your credit, first of all. When we pull your credit,
a lot.
You know how many people I've talked to, my credit's perfect. I pull their score to 6, they're in the 6s because there's a medical charge off, that they have, that they had no idea, or a Verizon bill that went to an old address that they thought was paid off, and they have no idea. So, once we can, advise them, then we can also give them an action plan to say, hey, you're not buying for a year. That's great. Do these things, follow these steps to maximize where you're going to be at that time. So now, a year from now, when you actually are ready, you're fully equipped. You're ready to go. No surprises. You're going to get the best deal out there. So just give us a call.
Education.
And guys, it's free. We don't charge people. We don't charge an application fee. Nothing. It's free. And we're definitely not pushy salespeople. That's it. We're really not. It's like, this is the deal. Great. If you don't like it, no problem. Thank you for your time.
No, but I do like to think that if as far as lenders go, one of the reasons I'm with you in the first place is that I do have that feeling. If we can't do it,
it's not getting done.
Probably not many that can.
It's not getting done.
I mean, the creativity part of it is a whole other aspect, but I think that is the side of it that was most appealing to me to learn from you. Was just being able to come in and understand like some of these different like scenarios that you put together on somebody that maybe has a complicated scenario and how to work it out so that they can make a purchase, and whether it's exactly what they wanted now or it's kind of a stepping stone to the next one. Looking at all the alternatives. I mean, I've told you a scenario I had recently where it came to me from a bank that they worked for, and they were declined. Yeah, and it was as simple as, okay, well, if we pay off this debt, it changes your affordability by this much and lowers your debt-to-income ratio by this much, just enough to make that house affordable for you. And it was a 25-minute conversation, and it changed his world.
It is amazing because to me, and it's my own, this is one of my own just faults, I'll say. I look at stuff and I think everyone assumes and understands the same things that I do. And it's just not the case. Like, I'll look at something and think, oh, well, just do this, that, and this, and this. It works.
Well, I learned that from you. So when I said that to him, he's like, whoa, you lost me, go back. And I'm like, no. If we do this, this, and this by paying off that and moving this here, and it reduces the payment, and and we don't have to pay off the entire car loan. We can pay off everything down to a point where there's only 10 months left, and then we don't have to include that in the debt ratio. And it's like, oh, so now I'm not spending $21,000 to pay off the car. I'm only paying $16, and that leaves me $5 for closing costs. Yep. It's just the like I said, man, it's creativeness that always gets me, because I wouldn't think of it if I was sitting behind a desk somewhere, or maybe somebody else that didn't train me. So I think that's where I feel like blessed.
So thank you. It's one of the things I wanted to topics today is hiring. As we're looking for at least 5 more experienced loan officers that have at least a year or 2 of experience or more, preferably, that have some bit of a following.
Or a realtor, maybe myself, that had some understanding.
Yeah, FHA has pulled some of their restrictions on realtors being able to originate, and I think with a lot of realtors complaining that it's a little slow right now, that doing this simultaneously at the same time is something that we would definitely entertain for the right agent. Like you know, I knew immediately from working with you as a realtor when you were referring your clients to me that you were a hustler. And when you said, "Hey, thought about getting into the mortgage business," for me, I don't just give my time to people because that costs, and it's very crippling to me when I just give time. For you, I knew it was a no-brainer because I knew that you were going to soak it up like a sponge. You were going to do your own work, and you were going to get there. So it made sense. So point is, if there's other agents that like you obviously are a lot closer with realtors than I am.
Yeah, but that could be something. I mean, we've talked about that. At this point, I feel like, you already have me mentoring one person. I feel like as a realtor, if it's somebody that came over as a realtor, I would feel
it's a
comfortable
no-brainer
enough training them on how to learn,
like
do
Chris,
things.
you're already closing 4+ deals every month consistently in what's probably the worst market we've been in since I can remember, and you only transitioned like a year and a half
2
ago.
2 years ago.
2 years ago.
But and I will say, like,
But
that is my relationships. It's because of the realtor relationships that I have, and the fact that these friends have, we'll call it, supported me and trusted me with their clients and given me the opportunity to share my the knowledge that I'm learning from you and from trainings. And I think that again, the relationships.
Yeah.
Like that's driving it all.
It is. If realtors that might be watching this, if you're a hustler and you're not afraid to work hard, and you will make money. You can make money. If you want to do something to help supplement, house sales are a little slow. We would entertain the right agents to bring them on, teach, train. It has to be
just in Connecticut too,
be someone that is definitely a hustler. Like we don't have time for people that are just going to sit there like this and hope that something comes to them. That's just not our environment. That's not how we do things.
It's the 5 a.m. text messages.
5 a.m.
ready to rock.
Yeah.
Ready to rock.
And I'm being nice at 5 a.m. No, it seriously, like if we're gonna put our time into people, that they have to be people that are willing to go for it.
Just the work ethic. That's it.
The work ethic.
Just show us that you want it.
With a work ethic, with our workflow, our programs, our systems, and the fact that our rates really are, 0.5% on average better than our competitors, not missing any programs. Like it's just there. You just have to go get it. It's literally just go get it.
Would you? I think we need to remind everybody how many states we're in, because I think like I have some relationships in Florida. I know you have some relationships in different states as well. I mean, I'm licensed in Florida, but I think we could use a loan officer in Florida right now. Yeah, big time. We have some business, but understanding some of the demographic and everything down there would be helpful.
We do a lot of business in Florida. So to speak on that, one of the states that we do a lot in as well is New York. New York is a difficult state to be licensed in the mortgage business,
to say the least, whether you're a realtor or a loan officer.
In the mortgage end, I started working on the company's New York license before anything else because it's a long process. And, it takes on average of two years on average to get a license from when you start. So, Connecticut, New York, New Jersey, Florida, Mass, North Carolina, South Carolina, Pennsylvania, Florida, Georgia, and Texas. So that's 10.
Don't forget Texas.
Yeah, Texas.
Georgia's our most recent state, right?
Georgia and Texas came around the same. Yeah, I think Georgia was last. Yep. Yeah. Okay. Texas and Georgia. But so if a lot of people up here, a lot of people here, have connections in New York and Florida. Right. So it's really that tri-state right there. We have that covered, and because everything is paperless and web-based, it doesn't matter. Our appraisal management companies, that we work with are all, everything is connected. This is it. Our loan origination system, you can literally go on there, take an application, and submit a loan to underwriting with your phone. I'll be honest with you, I wouldn't want to do that on my cell phone.
It's not. I'll tell you what, it's
but
not
you could. It's
super complicated. But I've done it at a basketball game, watching, kind of on the sideline, working through it. But so you can do it if it needs to get done, or at least get a pre-approval out. It's simple enough to be able to do that, and that in itself, you don't have to carry the laptop with you everywhere you go, and a lot of good things. No,
but aside from, on a serious note, I really want to speak to the experienced loan officers. on a side note, aside from a realtor that, possibly would be interested in coming in, someone that's experienced, like, I really want to talk to you guys. We do things so different, and we are different. Like the creativity, and when I try to preach what we do, I'm always saying, we pay more per loan, and the rate you have to sell to make that higher comp is lower, and we're not missing any programs. Everything is faster. Like, that's all great, and I know it's great, and why wouldn't you want that? But what I don't preach enough of, I don't think, is the creativity. Like, especially now, the refi boom has restarted. That is where I feel myself, that's where I shine, is the creativity in refinances. Like, we're going to be in front of everybody as far as who is going to be able to make sense of refinances first. Because aside from the fact that our rates are better, we have completely developed our free refinance program, which we call the Triple F, which we've been running through so many scenarios. Where I'm going to give you one example right now. We have a customer that they had got, and this is just a recent deal. They closed last month with another lender. They received a 7 1/8 on a 7-year ARM. So if it was a fixed rate for 7 years, 7 1/8 they closed. I'm refinancing them right now. The rate's 6.5%, but I'm paying the closing costs for them with a lender credit. So it's free. So I'm taking them from a 7.6 ARM to a 30-year fixed, dropping the rate from 7 1/8 to 6.5. And people say, oh, well, you have to save a whole percent in the rate, or, there's so many
misconceptions.
They're not even misconceptions. I'm just going to say they're ignorant statements, and I don't mean to be rude, but it's because what is that based on? That's based on assuming you're paying X amount of dollars in closing costs.
Right, but if you're not paying for it,
so that's not relevant if it's free. So if a loan is free, and when I say free, because a lot of people say, oh, yeah, no, you're just adding that onto my loan balance, that $5,000. No, what I mean is your title charge in Connecticut, title charges, underwriting fees, appraisal, recording charges. Let's say, and this is assuming a 0-point loan, right? Assuming a 0-point loan. Those costs on a refi in Connecticut, somewhere's around $3,000 to $4,000, give or take, okay? We give you a lender credit of that $3,000 to $4,000 and give it to you at closing. So closing costs, call it $3,500. Lender credit, $3,500. Pays for it. So there's no recuperation time. So you could pay this loan off or refinance immediately, and you didn't lose anything. So that's the point. If you're saving, even if you're only saving $180 a month on this loan example, why would you not do it? It's the process is so fast and easy. We close these deals in 2 weeks. And if there's no appraisal, which a lot of these have no appraisal, we can close it in 8 days. 8 days. You're e-signing a couple of docs, you're uploading a few things to our secure server, and you're closed.
But so I'm going to combat that. Well, because the question that's coming, which I'm getting already. Well, that's great. You can refi me now, and there's no cost. But what if rates come down again?
That's the bet. That is why we devised this program. And my anticipation is that rates are going to slowly continue to go down. So I think 3 months from now, rates will be lower than they are now. Although anything can happen. Rates could go back up, which is why we've got it covered on both sides. So if we do this right now and rates go up, well, you refied, you saved. You didn't risk it.
You didn't spend any money.
You didn't spend any money.
But you saved $180 a month.
If rates come down, guess what? In 6 months, we can do the same exact thing again for you, and it makes sense for you to do it again because you didn't incur any cost to do it this time. So now, in 6 months, you might say, oh, well, okay, that's great, but now I'm going back to 30 years. Okay, how about we set your term at 29 years and 6 months?
Exactly.
You can do whatever you want. Or somebody may say, well, James, okay, well, I don't really care. I get this a lot. Well, I don't care really about, I like to save money, but the monthly payment doesn't bother me. No problem. Well, let's keep your monthly payment exactly the way it is. And instead of you have 29 years and 6 months left right now, you're now going to go down to whatever it is, 27 years to keep that payment where it is. Now you've just saved 2.5 years of payments.
Off the back of the loan.
Which could be, $60,000.
Yeah, so you're only into equity, even faster.
Again, for free. So this is loan officers. This is what we do all day long, okay? I know my non-bank lender competitors can't do this because their pricing isn't there. The pricing just isn't there, guys. Like we're doing this. Like, I'll give you an example. In And to give you how easy and fast these are, in 2021, when the refi boom was crazy, in the shortest month of the year, I closed 38 refinances that month in February.
By yourself?
February.
By yourself?
By myself in February with just a processor, and I was running the company, doing everything else. And I originated those on my own while doing everything else that I was responsible to do. It's because our systems are that simple, they are that fast, and we have perfected the refi process, and our systems have only gotten more efficient since then. Like our LOS now is twice as fast as it was back then.
Oh, agreed. I mean, since I've come on, it's twice
So
as fast.
it's loan officers, you get that creativity. I will show you how to do that. Like that's what we're really good at is how to creatively do this. So the customer benefits where if there's no cost to the customer, you make a good commission, and these are lifelong clients that now anytime it makes sense, doing another refi makes sense because it didn't cost them anything.
Right.
It's really a win all around. I'm very passionate about this right now, as you can tell.
Yeah.
I need to stop talking. Oh, Chris, what are we going to do with you?
I was trying to jump in when I could.
Sorry, buddy.
No.
I get carried away.
No, it's all good.
It's funny because I even have some people that I'm friends with that have reached out and say, hey, James, you have any good mortgage podcasts that you recommend that I watch to learn more? And I'm like,
Like loan officers or just general people?
People thinking about getting into the business and just other people that want to learn more that are just maybe they're renting right now.
An educated
They
consumer.
want to. No, I'm like, yeah, Forte Financial. This is it. This is we're here to educate. Thing is, like we do think like we're not everybody else. Like we're not. We're very different. We have our own. Just our whole model was designed truly to be the best from every angle. Like in terms of like the number, in my opinion, I know you probably, a lot of people think, oh, well, it's just servicing the client, giving the client the best service and returning phone calls and, being the best is the most important thing. And I know a lot of our competitors, like they just try to sell that and they try to sell themselves. And
or it used to be, we can close in, 20 days. That was the thing. That was the sell is like, oh, we can close it faster than anybody in 20 days or 21 days, whatever that was.
And I'm going to assume for a minute that, we're equivalent to these other lenders, right? Let's assume everyone's equal in terms of their skill set and their knowledge, which they're not, but just for my example purpose. Don't you want to refer the client or, potential customer, don't you want to go to the customer and the lender's going to give you the best deal? Like that is what we did. I said, I don't care what, everything else is second. We have to have a model that we know we can give the customer the best deal they're going to get anywhere, while at the same time not working for free. And that was the premise behind opening this company for everybody. It's a win. When everybody wins, you have a recipe for success. And the reason why we're able to accomplish that is because, well, first of all, the wholesale channel, in I think it was October last year, UWM, United Wholesale Mortgage, became the #1 lender in the country. And what's relevant about that is you cannot get a loan from UWM by calling UWM. You have to go to a wholesale broker like Forte Financial to get a loan from UWM. And the reason why they're #1 is because of pricing and rates, because the rates are better than local banks, on average 0.5%. And, a lot of our non-bank lenders don't realize that because, and I didn't either until, well, I mean, I did once I started to research, because a lot of these non-bank lender loan officers, they were in wholesale a long time ago. And in their mind, they think it's still like it was in 2010, where that is when everything changed and we started getting e-signing and disclosures and then websites and uploading. That's when the broker channel fell apart because the brokers didn't have technology where the non-bank lenders did. So that, and then the pricing was actually same or better with those non-bank lenders at that time. But now, fast forward, I mean, the scale has been like this. It's been like a rocket ship. So now they can't compete. Anytime we get a deal that a non-bank lender quoted, it's not even close. It's not even close. We're when we say 0.5%, it's usually at least 0.5%. And on government loans, Don't even get me started on the government loan pricing. I mean, I've had deals where over 1% better with less closing costs. It's just...
Well, I mean, one of the nicest things that I'm going to throw out there for me is that even if we're competing, let's just say against a non-bank lender for rates, when we use our search engine to price a loan, I think we're at 24 different lenders right now that we're working with.
At least.
And at that point, so
and we'll add anyone we need to.
Right. Maybe they're not all doing the Fannie Mae, Freddie Mac conventional loans, but there's at least 10, 12, 15 of those that we're getting pricing on to see who's the most competitive for that unique scenario in each instance. So it doesn't matter who it goes to, if it's UWM or otherwise. We have that opportunity to give the customer the best deal every time because we know what everybody's pricing is.
Yeah, and then we get special incentives from some of our lenders here and there. So the thing is too, like I remember when I was my previous employers and my previous platforms. Oh, let me price up. I have this deal. It's a purchase. 30-year fixed. What's the 30-year fixed pricing? Click. There's my rates. That's it. That's it. It's one rate sheet.
Right.
That was my rate, and constantly I'm looking at that, and I'm like, and I'm looking at the rate, and then I'm going on like all over looking at what my competitors in the area, and I'm looking at, okay, well, looks like this bank is 0.25% lower. Oh, this bank's an eighth lower. This one's 3/8 lower. Like, and I didn't sleep well at night, Chris. Like, I absolutely despised having to sell a customer a rate that was worse than they could get somewhere else. And especially to just because I'm good and I can sell. So I have ethics and morals. Like I've never been a fan of just selling something to make money. Like if somebody could get a better deal, I didn't sleep at night. I didn't sleep at night. I hated it. I absolutely hated it. That's what drove me to do this.
When we're quoting these rates and looking at these rate sheets, most of the time, right? I think you'll agree that most of our lenders, like if let's just say we're competing against a local bank for some reason, and they're at, we'll call it today with today's rates where they are, maybe they're at 6.5. Well, maybe we can't get them to 6 3/8, on that kind of that even span, but maybe we can do 6.412 and beat them by a tenth.
Yeah.
Just to get it down enough. And sometimes that may make the difference between the deal working or not.
Yeah.
It's just that little bit of interest rate change. So the customization, again, or the creativity part of it is another reason to,
right.
to work with a broker. I mean, it gives us that ability at Forte to just customize every single loan.
Right. I mean, and we're also a lender too. In the state of Connecticut, we are also a lender. So we have, there's even a few additional options that we can get, even more creative when we need to. But it all comes down to whatever is the best deal. Whatever is the best deal. Like a lot of lenders who are also brokers, ask your company who's a broker also if they'll let you broker a 30-year fixed conventional loan to Provident Funding. Go ask them if they'll let you do that. They're not going to let you do that because they're not making any money when you do that, and I can bet you that rate is probably a lot better than, your rate sheet pricing. All I'm saying is just educate yourselves, loan officers. And the problem why I feel like I don't hear from more loan officers is because loan officers are bombarded. Every loan officer, I get bombarded. Everyone gets bombarded with every mortgage company out there. Oh, we're hiring and we do all these great things. And it's so annoying. I can't, it is beyond frustrating, the amount of solicitation. So when I say, oh, we do these great things, it's going in one ear and out the other because they just assume I'm just some other, else. Just like everybody else. But that's why I feel like these videos and the more people see it, the more they'll realize and have a 5-minute conversation with us. 5 minutes. If anything,
or come and sit down with us at the office.
If anything, wouldn't you want to learn some trade secrets of what your competitors are doing? I mean,
or how you're getting beat out by
or how much we're beating you by. Because I'll do side by side. I do side by side comparisons all the time with loan officers, and I have no problem. You're gonna learn trade secrets. I can't control that, and it is. But there's nothing to hide because it's not like if I share my rates with you. And you share your rates with me. It's not like you go back to your employer that they're just going to lower their.
Yeah, you're not going to go back to a non-bank lender or a depository bank, and they're going to just change their rates because we can do that.
And the bottom line here is, these non-bank, and I'm not. It sounds like I'm taking shots at that. I'm really not. It's just that they have all their managers, executives, secondary marketing department. The amount of employees and additional expenses that they have, and that's what your rates are. You're paying those people because although this fancy marketing and which the thing is, we have all that too though. We have everything from our CRM, our post closing. We have a very new post closing follow up system, which is second to none. What does everybody want? Loan officers when you close a loan, you want to stay in touch with your customer, but you don't want to annoy them.
You want to provide beneficial
information. You want to actually provide them with something that when they get an email from you, it's not, oh, Happy Veterans Day and it's Valentine's Day today. Nobody wants that. I've tried those CRMs and I've had really good customers literally opt out. I'm like, this is somebody if I saw on a street, they'd give me a hug and hey, how's your? They're opting out of my emails. Like it's beyond maddening. So we have a new system now, which is so cool, where it actually gives the customer, hey, here's what's going on with your house, the values and estimate value now, and here's what you could do with the equity. There's so many cool things. It tells them about their house and real estate in the area. Like I'm on this too, for myself. And when I get this thing, I'm excited to see it. I'm like, oh, cool. What's and you can play around with it. And we also offer a special service. Like I think this month we have it's like a 25% off a cleaning service. So we always give them.
Oh, like the little added.
It's part of our program where we have vendors that work with us that we give a service. So I mean, this so the point is, we're a smaller company, but we have everything you need. In terms as far as loan officers, health insurance, 401k plan, with company match, CRM, everything we have. So there's nothing we're missing except we don't have the red tape. And instead of putting that money in other executives and employees' pockets, put it in your own. Like, why are you sharing it? There's nothing. I don't know. I'm very passionate about what we're doing here because I've been on every side. I've been a broker in the past. I've been a non-bank lender, and now back in the wholesale side, with my company now, it's crazy because people think that brokering is printing out a package, signing it, scanning it back into the computer, emailing it to the customer, photocopying W-2s like that. We're so fast. So I had a deal, and I'll talk about this deal. That first conversation, it was, hey, we got to get this done quick. The first conversation with this customer to a loan commitment was the same day. First conversation. Like, that's how efficient and fast our systems are. You can't do that without the best systems and workflows. But, it's, like I said, we're looking for five good LOs right now. Is the target that we can bring on. We're gonna. You got to be a hustler though. We got to be a hustler. Like we are, all of our social media, our website, all the marketing. We've been spending thousands and thousands of dollars, into this. The phone is ringing. People are calling us for loans because they're seeing our stuff, and we're giving those leads. How many leads have you gotten recently? I mean, we're giving these leads out. Like, is your non-bank lender company giving you leads? I mean, probably not. At least other loan officers I know working for these, they're not. So I mean, maybe I know obviously loan officers work in banks, they're getting all those leads, and they're also making 25 to 40 basis points per loan. So that's a good fit for somebody that is maybe just doesn't want to go hustle or and just wants a security blanket. But if you're a hustler and you're a go-getter, this is the place to be. No doubt. You have my full support. Like, I'm not just an owner that just manages people. I practice what I preach.
No, you tell the matrix behind the keyboard.
You tell them how I've been this last week or two.
An animal between the emails and the information and then the team's calls, and they don't stop. Because
I want you guys to succeed, and I show you guys how to structure refis that nobody would even think makes sense as a refi. You get that. You get that. To me, that's the benefit of being here. And we're about to walk into 2024, which in the right environment like we have, you can easily make, what people were making in 2020 and 2021 in those booms easily. So, and then, you talk about the way we do non-QM and like our DSCRs, investment property deals. Like
the no-doc loans are definitely one of the places we shine. I mean, I enjoy doing them just because I like working with investors and people that like to, just kind of build wealth and generational wealth.
No, I love my investor clients. I love them. They're amazing.
Those programs are so fantastic. I mean, we have some of the uniqueness of those programs, whether it be the P&L loans or the bank statement loans or the tax ID loans. I mean, done them all, and they all, once you learn how to do them one time, it's just a simple process.
Yeah.
But again, just having access to them is what makes it great. So we have pretty much any scenario that we can come up with, we can pretty much make worth. I think I told you I had met someone that has been living in the country for 10 years, is now technically a citizen, but has been running a business out of her personal bank account for 10 years. Never set up a business structure, doesn't have an LLC, pays her taxes, claims the income, but never actually set up a business structure. Well, one of our lenders, we took 2 years of bank statements based on the business income. We were able to highlight all of the different deposits through, kind of checks and balances. And we created a profit and loss statement with the lender's underwriting team and basically came up with an income for the person. And she's going to be able to buy a home in 2024. Just from a personal bank statement, small business. No business structure, no accountant doing it, just working with us and closely in touch with the underwriter on the other side. Like as a realtor, I could never imagine being able to help somebody like that.
Yeah. No, I mean, there's different levels too, especially, the self-employed and non-QMs. And we have so many different investors and lender programs that, if there's any way to fit it, we'll fit it.
For sure.
Definitely. Yeah. One of the things that we put up some the problem when you do short clips to try to educate about programs, we did a couple of short clips on reverse mortgages recently, and there were some comments, and it's tough because people don't have enough time to learn or listen when I'm just speaking for 30-second clips, and I just want to clarify some of the reverse mortgage stuff. So, we do a lot of reverse mortgages, and it's such a great program. When I suggest that someone that's a senior takes out a HECM, home equity conversion mortgage, which is like a HELOC, but it's different because there's no expiration date aside from when the borrower passes away. Then obviously they can't take any more money out. But the point isn't to sell something and have someone take their equity. It's just like a credit card. If you open a credit card and you don't use it, do you pay anything per month? No, there's no bill. There's no balance. The point of why I think it's important. So as this is such a tough subject, and it's a very tough subject to talk about with families, so I understand why, there's a lot of tension. But when you think about when parents start to get older and it's a children's or family's responsibility, you want to be in a position that you're equipped when something happens. And the point is when someone gets to a point, a senior gets to a point where they are maybe dementia or something like that, where they're no longer mentally capable of making financial decisions, they're not going to qualify for a reverse mortgage unless we can verify that they gave power of attorney to somebody while they were competent. If they gave power to attorney after they've been, declared medically, incapable of making decisions, they're not going to get a reverse mortgage. People don't understand that. I had many comments. Oh, the POA can. No, they can't. That's not how it works, because that's equity stripping. The amount of elderly, I'm sure we need to get an elder care attorney in here to help. That would be a good podcast member if you're an elder care attorney and you're interested in and help us educate on some of these predatory issues, please reach out. We'd love to have you on to talk about this stuff. But the point is, if you set up a reverse mortgage now, a line of credit that you're not incurring any interest on because there's nothing drawn, when that person does become incapacitated, God forbid, down the road, and there's a POA in place, which there is when we set these up, somebody, that is like the contact, then they can access that money when they need it down the road. So that's it. I'm just wanted to clarify that
just
one thing.
A good long-term care solution.
It is. It's just like an insurance policy almost, in a way, where the thing that's cool about it too is what I love is if someone's 62 years old, they own their house free and clear, they take out this line of credit, whatever the amount is that, I'm going to give some just bait. Let's say the house is worth $500,000. They're 62. They're probably going to get a line of credit. I don't know. It's going to be less than 50% at that age, depending on where rates are. It's not a loan to value calculation. There's more to it. But when they take it out now, let's say it's $175,000, and they don't draw, so it's zero balance, but the line is $175,000. Every month that they don't draw, the line balance grows. It gets bigger. So like if they don't touch it, and then now they're 92, it's 30 years later, there's a chance that line of credit available is actually greater than the value of the home at that time, depending on what happens to the values. Like you could have a line of credit that's, I don't know, $1 million, and the house is only worth $800,000. And guess what? You can take that $1 million out, and nobody has to pay it back. So there's more to it after what happens when somebody passes on. But the point is, these are tools. Like I'm not trying to explain everything right now. I just wanted to clarify some of the misinformation that was out there. And if you have a family member that you want to help protect, put something in place like this, so
so it doesn't fall on them.
So it doesn't fall on you. Let us help you. We've been doing a lot of these reverse mortgages lately, and it's a good thing. We're looking forward to a great 2024. It's going to be amazing.
It's going to be a great year.
It's going to be amazing.
Looking forward to it.